Inflation is low, oil prices continue to decline, the rupee is stable, forex reserves are an all-time high, but growth is stuttering. But to just a day after the first quarter GDP numbers pointed to a sharp decline, it's not all gloom and doom. That's the verdict of the top CEOs of Indian industry. Most industry honchos who participated in the ET Now State of the Economy polls say the prospects look good on a medium to long-term perspective. There is a big thumbs up to GST, and most CEOs agree that there is a marked improvement in the ease of doing business.
And despite the RBI annual report suggesting that demonetization may not have achieved the desired results, industry captains believe that the note ban may have helped cleanse the system. One big problem area for most CEOs polled, of course, is the poor pace of job creation, even as a big majority of them blame high interest rates for poor corporate investments. I'm Sandeep Gurumurthy. Joining me in Delhi is my colleague Supriya Srinath. And over the next 1 hour, we'll make an attempt to rise with India and debate ET Now's State of the Economy poll on the India development debate.
Growth fangs, growth sinks, growth suffers, growth crashes. The many ways a sharp dip in growth during the first quarter has been defined. But an exhaustive poll of India's top 35 CEOs done by ET Now gives a more positive picture. Almost 64% of those polled believe that monsoon, festive demand and good global economy will ensure that the second quarter GDP growth rises substantially. In fact, almost 60% of the top bosses believe that despite the low growth numbers, consumer confidence on the ground has improved significantly in the last 3 years, with 31% disagreeing. But the jury is still out on the ease of doing business. India has jumped up very few notches in the World Bank list as well, clearly reflected on the ground. While 49% believe that things are better, 34% insist they really aren't. Now, while many assert that demonetization hasn't yielded big results, nearly half of the country's top executives say that it has helped cleanse the system. But a high percentage of 23 can't make up their mind yet. As far as fresh investments are concerned, a clear majority of 54% blame it on high rates of interest and 37% blame it on other things like balance sheet problems, low demand and low utility. But corporate India believes that the government has failed to fix the NPMS, with as many as 54% feeling let down and 29% insisting that the government has tackled the toxic issue. Now, while economists and market men have often debated whether markets are racing ahead of reality, India's top chief executives are cautious about the market rally, with as many as 43% insisting that the euphoria cannot be justified. No more armchair economists in Niti Ayog, meanwhile, impress India's industry captains. 40% believe they have lived up to expectations. And the good news for the government is that despite frequent tinkering in GST rates post its implementations, India Inc.'s top bosses don't seem to be losing confidence at all. Almost 66% are absolutely alright with it. But the big red on the government's report card is unemployment, with over half of the 35 CEOs asserting that the government has failed to create jobs. So what will be the growth drivers? Will RBI cut rates out of turn? Where will jobs be generated? When will fresh investment begin? Will NPAs be finally resolved? Burning questions on the state of this economy that we will debate on India Development Debate.
And as usual, we've got a stellar lineup of guests joining us on the India Development Debate this Friday evening. Swaminathan Iyer, consulting editor, ET Now. We've got Hitesh Jain, spokesperson of the BJP, Priyanka Chaturvedi, national spokesperson of the Congress, Shobna Kaminini, president of the CII, and R. Jagannathan, editorial director at Swaraj magazine. Thank you so much, all of you, for joining us on the India Development Debate. Swami, I'm going to start off with you because just yesterday, when we were analyzing the GDP data, it seemed like all gloom and doom. And yet this sort of poll done by ET Now seems to indicate that 68% of the CEOs polled believe that Q2 is actually going to be better than Q1. We've had the new Niti Ayog Vice Chairman Rajiv Kumar say emphatically that he expects Q2 growth to be as high as 7.5%. What's fueling this optimism? I mean, what is it that we're unable to read that CEOs are reading on the ground?
I will simply say, on the one hand, CEOs tend to be very polite when predicting how well or badly the government is going to do. So any particular positive spin that you get from the CEOs, I always take with a slight pinch of salt. Rajiv Kumar has just joined. I think I've never heard of anybody joining the government on a gloom and doom note, and Rajiv has not disappointed on that particular account. If you just look at the hard data that we have, the PMI data, both on manufacturing and on services, were very bad in July. I mean, really bad. Some bounce back in August, apparently. But I mean, when you start off on such a bad note, the chances are that things would actually worsen in this particular coming thing. And it's not entirely unexpected. After all, if there is going to be a certain amount of disruption caused by GST, if there are all kinds of questions and people don't know what is the rate I'm going to pay, what should I do, should I hold back? I mean, it would be natural to expect some kind of disruption in this particular quarter. I mean, I did hear yesterday some BJP spokesman trying to claim that there was disruption on account of GST in the previous quarter, which I can't understand. I would expect it to come into this particular quarter. So frankly, I don't see this quarter doing particularly well either. And anybody who is worried on that account is fully justified, whether CEOs or anybody else.
Okay, so you're going to take it all with a pinch of salt as far as the optimism from the CEOs are concerned. But Jaggi, I'm going to throw this to you. Are you surprised with this optimism? I mean, 68% of them actually believe that growth will not worsen in Q2 and growth will be better. What do you believe will be the levers of this growth according to them? Are they looking at a landscape that is very different from ours? Are they pinning too much hope on monsoon? Are they pinning too much hope on global economy?
Well, if CEOs are not optimistic, they ought not to be CEOs. I think if you're not optimistic about your business, why would you be in that business? So, which is fine. I think they see these are transitory problems because we've been facing demonetization certainly came as a shock to everybody, and it has certainly dampened the mood of what could have been a turnaround by the end of last year. But what we are seeing is, I think one quibble with Swami. I think there was a GST related problem in the first quarter because in June people were destocking. So it's not surprised that one is not surprised that the first quarter was bad, because just as the final lag effects were of demonetization happening, you had the GST disruption. I think, and July was also disrupted because people are just adjusting to the new regime. I think you will see a strong restocking rebound in August, which is what the PMI numbers are showing. And I think by September, the festive mood will actually start increasing. So I do see some increase and improvement. The second point is, I think government has announced the HRI changes. There will be a consumption-led improvement in the sentiment in the thing. But for the real big growth to happen, you need investment to revive. And I think I saw your own channel saying that Mr. Kumar Mangalam Birla thinks that's 12 months away, which means you have to have your NPA resolutions, banks deleveraging, and then starting the whole process again. I think what we are actually seeing is that till 2018-19, you will not see a real revival, and that is the reality as of today. But I think you will see a gradual improvement, and the base effect, when last year GDP was falling in the second quarter and this year you're seeing restocking, you might see some big jump. And Rajiv Kumar may be a little off the mark, but his overall optimism is justified for the second quarter.
I'll tell you what, I'm going to play those comments of Kumar Birla, in just a bit. But let me get in a quick reaction from Shobna Kamini, the president of the CII. We spoke on consumer confidence as well, because that's a key. India's largely been a consumption-led growth, and again, even though sort of private consumption, figure for the first quarter has been a little disappointing, 6.7% versus about 7.4% in the March quarter. What's important to note is that corporate India is far more optimistic. As many as 57% believe that consumer confidence has improved considerably in the last 3 years. Ms. Kamini, do you share that optimism on the fact that the consumer sentiment is still very strong? Because one would have imagined that demonetization would have hit that sentiment pretty hard.
I think that we're over the effects of demonetization at this point. So we're really talking about this quarter, and this quarter will, like Jagan said, it will come back up because what companies had destocked earlier, their inventories, they now have had to produce to grow it, and with the upcoming holiday season, this quarter is actually going to really tick up, and that's where the confidence of industry is coming from. And if you see our growth for the last couple of quarters, it has been consumption led and from public spending. Industry still hasn't added new capacities, but now we're at 75% on an average. So those that haven't reached their total optimization are actually starting to plan out investments, and this should happen early next year.
Okay, should happen early next year is also the word that's coming in from your corporate cousin, Mr. Pirla also, and we'll play him in just a bit. But I'm going to take this across to the two politicians on the show, and Hitesh Jain and Priyanka Chaturvedi, this is really coming your way. Our ease of doing business report doesn't seem to show, at least the World Bank report doesn't seem to show a significant improvement. We've gone up from, I think, 131 to 130, so that hasn't been a good indicator. We polled the question, do you see a marked improvement in ease of doing business in the past 3 years? 49%, almost half of them say yes. A big number, 34% say no. My question, Mr. Jain, is that while the data is not compelling, hasn't the government done enough to fix the nuts and bolts, or are your efforts championed in a direction that they perhaps are not, that are not yielding results? Why is it that the top 35 CEOs of this country don't think that the ease of doing business has improved significantly, even though the government would like us to believe that they've done a lot to ensure it is?
Ease of doing business is a continuous process. And we cannot say that, okay, the steps have been taken, everything has now become easy, and now, it's this thing. So when you inherit a legacy of 60 years, and when you start, and when you're not looking at easy, quick fixes, but you're looking at making structural changes, laying down structural foundation, obviously it's going to be slow, but gradual, and as one of the speaker mentioned, we are still in the transitory phase. Now, one of the important data which I want to throw, yesterday NCLT came out with their figure on the insolvency and the bankruptcy code, the matters that are going on, and they said close to 600 matters have been dealt with. That is the first part. The second part you can see is that just a year and a half before, Commercial Courts Act had also come into the place. Now, judiciary, when it comes to ease of doing business, one of the focus has been on the justice delivery system in India also, and that is also one of the reason why our rankings are coming down. Now, the government has done its bit on addressing by enacting the Commercial Court Act, by providing a fast track mechanism. There are amendments that have been reflected in the Arbitration Act, and so on and so forth. And as you are aware that Niti Ayog had also called for the meetings of the CEOs, the startups and everything, and this is the process where the feedback is being taken, channeled, and we are trying to deliver. So I think in 3 years there has been a substantial improvement. Even if you will look at from the FDI policies and everything, it's been all these processes have been made simplified, easier, and you will have to give another 6 months to a year to couple with the way GST has brought the reforms and see the impact on the ground. So clearly, and that is the reason 49% is not a small number when 49% of CEOs are holding an opinion that ease of doing has definitely improved in India.
Okay, Priyanka Chaturvedi come in there, so the majority of the CEOs believe ease of doing business has improved, even though the World Bank ranking has shown a marginal improvement. Now, the stated position of the Prime Minister has been that India should get to the top 50 as far as ease of doing business is concerned. So that's a stated position. How would you respond to the point that that Hitesh Jain is making here on ease of doing business? Give it some time and you'll see the difference.
No, give it how much time? Where are the deadlines? Where are the accountability seeking? Where is the analysis of what has been done to ensure people feel that it is a good time to invest in the country? let me just go back to what Mr. Hitesh was saying. Of course, it is a noble thought that we should be doing in the top 50 countries in ease of doing business. However, on ground, if we don't see that happening, he was talking about some structural changes. Well, demonetization was one structural change that you all spoke about. An RBI report yesterday showed emphatically that how it managed to lose the confidence of not just the consumers but even of businesses. Lots of businesses were wiped out during the process of ensuring that demonetization was implemented. Now we are coming to GST. When we talk about ease of doing business, there are many, as far as GST is concerned, there's a lot of documentation that is required, which business houses have come forward and spoken about, which many small businesses have spoken about. So how do you first ensure that people domestically feel confident about ease of doing business and feel enough confidence to invest in the country? Then we talk about your FDI policies. Your FDI policies, if you look at any company right now, while they talk about positivity and positive momentum, we do not see the confidence building enough for them to be investing in the country. And that is why you see a higher rate of joblessness. You do not see an employment growth rate. You do not see credit growth rate increasing. It has been at an all-year low, 53-year low. So these are questions which the government needs to tackle, while the CEOs can be absolutely optimistic, and of course, like someone said, it is their job to be optimistic, to look at the positive side of the economy. However, I am very certain that they understand the challenges that come along with this and the expectations that they had of the Modi government not living up to those expectations, and you see it in various numbers, whether it is in credit growth rate, whether it is in investment, whether it is in infrastructure building, whether it is in creating employment. So these are things that need to be tackled and need to be understood, and that is how your GDP numbers reflect the reality that prevails.
Well, it is easy to talk in semantics.
You know, Priyanka, because you spoke...
Supriya, just one point I want to make. As far as GST is also concerned, there is a very important data that came where a collection has happened close to 92,000 crore. And according to me, if you will look at the GST data and when you will look at the second quarter figures, and when people are talking, see, Congress is confused today. They do not know whether they want to back GST or they want to back out of the GST. We are all aware that GST was the decision of the entire GST council, and when GST was enacted and everything, when GST was brought into the force, the credit was given to everybody. In fact, they were also one of the, they wanted to start, the only sour pound for Congress is that BJP in its tenure has been able to enact GST. They were able to successfully brought GST into the force. That is the thing. Now about the insolvency and bankruptcy code also, the reforms and everything came. So these are what are called structural reforms.
Hitesh, I have a question. No, but why are we going to GST? We were talking about ease of doing business, and I think she mentioned demonetization, and Priyanka Chaturvedi, I will ask you a question on demonetization. Hitesh Jain, let's not take the discussion away from what we are talking about. We are talking about Mr. Modi making a promise of taking India to top 50. Is he on course or not? And this survey seems to be very ambivalent on whether it is or not. While people, while some believe he is, there are many others who don't. 49% believe that there is ease of doing business, 34% believe he is not. I'm going to take that point forward a little later. But Priyanka Chaturvedi, while I battled for your cause with Hitesh Jain, now I'm going to ask you a direct question. We asked these CEOs, has demonetization drive brought in tangible gains in cleansing of the system? And guess what? Despite the fact that we at ET now believe it perhaps disrupted the Indian economy, we've been doing debates on this, the CEOs believe, and 46% of them believe that yes, it did help in cleansing of the system. 31% believe otherwise, and a large chunk, 23%, haven't made up their minds just yet. But my direct question to you is, the CEOs out there whose businesses were impacted, whose profit margins would have been dented, whose products did not find takers because of demonetization, actually believe it helped in cleansing of the system. Ms. Chaturvedi?
So we also need to understand, while the big businesses could have absorbed a shock like demonetization, there are lots and lots of small businesses which were totally wiped out. Some businesses which were moving on to the next phase of growth were totally wiped out. The plans were shelved, and numbers will show that to you. I don't need to seek the opinions of the CEOs of larger companies, because I'm sure they had enough and more to absorb a shock like that. But unfortunately, we don't see that happening in terms of employment growth. Now look at how many people went jobless after that, how many job losses happened in even these big industries. So while the CEOs might maintain a stance, and I respect them for their stance, because and I want to go repeat what someone said, that it is their job to be optimistic and not to, sound like
there is no question of being optimistic.
Use the word, but
demonetization event has happened. In fact, suffered, and we are giving the reaction as to what has happened.
We must,
so
Mr. Jain, I did not interrupt you.
Demonetization.
Mr. Jain, okay. Please allow people to talk.
Priyanka, I get your point, but
please allow me to talk.
Sure. Priyanka, I get your point. I just want to pick up your point and ask a question to Hitesh Jain. She's raised a valid point. We've polled 35 top CEOs of this country, and like she's saying, it's quite likely that they would be able to absorb the pain of demonetization and the transition from sort of largely informal economy to a formal economy. And so I'm sure the president of the CII, who's with us tonight, is probably going to back demonetization. But the fact is, the impact on the informal sector is there for everyone to see. Hitesh Jain, can we run away from the disruptive impact that it has had on the informal sector? And I'm going to throw it to both Jaggi and Swami after your comments.
Okay,
Hitesh Jain.
Two things. Nobody denies that there was that demonetization was disruption, but disruption for good. Disruption to bring positive results, disruption to bring from unorganized to the organized sector. So when you see, look at the data that has been thrown in the RBI yesterday about the number of digital transactions. Fine, you can look at the highs during the demonetization period and still look at the data in thereafter. You can still see the number is significantly high. So when you are bringing a lot of unorganized sector to the organized sector, of course, that was the one of the aim of demonetization was to bring the unorganized sector into the mainstream. So you are after a when such a disruption happens, you will see an impact. But after that, there has been a lot of recovery. And as you have seen, I mean, you know, people are just making a statement. Oh, thousands of business wiped out, thousands of people lost their job. But where is the data? If you will see, one of the reasons why are we not also looking at the fact that between 2004 to 2014, the way the amounts were borrowed by the company, the way the amounts were doled out by the PSUs at that time, and the way there was no checks and mechanism. So it is the impact of those also on the business. So you cannot just look at demonetization as one of the factors that affected.
Hitesh Jain, I have there's a very direct question that we have on NPN. We'll go to that in just a bit, so I will not let you take the debate in that direction just yet. But, you know, Jaggi, I want to ask you, while we have polled the top 35 CEOs and perhaps they are a little more inert to what happened during demonetization, you know, their balance sheets perhaps did protect them and cushion them against this cash crunch. Cash is also this lubricant of economy in the informal sector for small businesses. And while we may not have readily available data on how things got impacted there, I'm sure if they were polled, they would have had a very different story to tell from their larger corporate cousins, won't they? Jaggi?
Yeah, I mean, there's no doubt that this economy had, especially at the job creating part, at the bottom rung of business and the informal economy, cash was very, very important. I think that was where demonetization backfired badly, and that is where I think the government did not reckon with the full consequences of it. I think it did not disrupt agriculture so much, though it when the harvest came and some of the mandis, there was a cash shortage there, it did create an unnecessary problem for farmers. I think what we need to do is, I think this part of the economy is where you really need to pump in the cash. It is in the city and the more formal parts of it where you can actually drain the cash away and get into digital. I think spatially you need to get your cash act right, regardless of whether you move more to digital things or not. And I think that is where the government goofed up. But I don't think when you do a huge thing like demonetization, you can get everything right, especially when you want to keep the secrecy element there, and there has been no experiment anywhere in the world which will tell you exactly how this will play out. So I would say that if you wanted to give a shock to the system, you gave it, but you also got a shock in return, because I think some of the things you didn't intend probably happened. So I think the government probably learned a lot. If you had to ever do it, of course, God forbid, you don't need to do it anywhere in the near future. But if you had to do it again, you would do it for completely differently. Now you know how you should not do it.
Yeah, Jaggi, let's just hope they don't want to, they don't plan to do anything remotely similar to this, at least not in the near term. At 5.7% growth rate, surely we can't afford another shock laga. But Shobna Kamini, I'm going to come to you on another important aspect. And we at ET now have been critical of the central bank for not moving swiftly enough in cutting rates, and the overwhelming view of corporate India is that the central bank has been way behind the curve in easing of rates. As per our poll, we asked, are high interest rates stifling fresh investment, and a majority view is that they are. But is there a direct correlation? So even though while we believe there's a case for lower interest rates, my question to you is there a correlation between low interest rates and investment? Is that the reason why investments aren't really breaking ground?
So first of all, I just want to give you a perspective on ease of doing business.
Sure.
Surprisingly enough, India did hit the under 50 when it comes to services sector. So I want to just give you that figure that you were debating on earlier. Not the best scenario, but this is a place that with 65 billion of FDI coming in, I think that many people think that that there's an environment where business can thrive. Coming to your point about, is there a direct correlation between lower interest rates and increased business activity? In a perfect world, yes. But what we're seeing now is with the stressed assets and the NPAs, the banks are actually very shy of giving those funds out. So I think first they need to ease that before. So even 0.5% is not going to make a difference to businesses. And I was very surprised to see the NBFC sector is actually growing very large. And this is where the small and medium scale companies are borrowing, and they're borrowing at way higher than banks. So please check those figures. So you'll see that how much our banks are actually lending to businesses nowadays. They want the retail loans because they feel that the NPAs are much less in that. But banks need to really get their mojo back and come back and believe in businesses and start giving the loans. The interest rates, I'm sure that once that corrects, then a lot of businesses will start moving up.
Okay, Swami, I'm going to come to you on this. Corporate India overwhelmingly, and we've just heard the CII president, who echoes the views of industry at large, blame high interest rates for stifling fresh investments. Our poll here says 54% believe high interest rates are to be blamed for stifling fresh investment, 37% no, and of course 9% say can't say. But Swami, do you agree with this assessment? Do you believe it is because of high interest rates fresh investments are not breaking ground, or are you going to pin the blame on other things? Is there a bit of a double speak here by Indian industry?
Well, no economist can say that interest rates don't matter at all. So obviously, when you say are interest rates high, are they high? Real interest rates, yes. But if the question is, will it make a difference to cut it by 25 basis points or 50 basis points? That, I would say, is too small to make a significant difference in a country where there are so many other headwinds against investment. I mean, the biggest headwind simply is lack of demand, especially of export demand, I would say. But when there is a lack of demand, why should somebody invest? You invest when you find that you already, your excess capacity is disappearing. You need to create fresh capacity. But if you have deficient demand, and to my mind, this is largely because export demand has evaporated. We have had export stagnation for 3 years. If you find, therefore, that there is no demand for product, even if you change the interest rate a little, you are not going to invest large amounts, certainly at the heavy end. On the other hand, a small change in interest rates can make a change in the EMIs or the hire purchase and various other things. So yes, there are ways in which it could help the economy somewhat. But as I said, the big elephant in the room is deficient demand, not excessive interest rates.
All right, the elephant in the room is deficient demand, not excessive interest rates. But I'm going to go across and actually listen into a conversation that Sandeep did have with Kumar Mangalam Birla earlier today, one of the most important and one of the tallest captains of Indian industry, who believes that the investment cycle is at least a year away. And that should be a concern for policymakers in New Delhi. Let's listen in to Kumar Mangalam Birla.
I don't think numbers for one quarter fundamentally would shift the view on India. I think it's to do with manufacturing, it's to do with the fact that, banks have large NPAs, you have several companies with large debt on their balance sheets. Those are being taken care of. And I think until that hurdle is passed, it's obviously difficult for us to see large investments in the manufacturing space. So I think it's work in progress. And I think that the government is doing all the right things, pressing all the right buttons to clean up what I think they inherited. Especially in terms of bad loans.
What about the investment cycle? Obviously, investment is a function of demand, and obviously there is excess capacity in the system. But how soon do you see the investment cycle turning? Because private investment, many believe, is the key to the revival of the economy.
So again, it's all a derivative of each other. It's all a vicious cycle. Because of large debt on company books, investment capabilities are obviously very limited. Banks have seen a spate of bad debts and are very risk averse, and I think rightly so. So I think all of this has to unknot itself, which I think is the plan of the RBI and the government and the banks. And I think that once that is cleaned up to a large extent, we would see more manufacturing investment happening. Up until then, I think it's a little unrealistic to expect any large investment in manufacturing as a space.
And this could take 6 to 12 months?
I think it would take 12 months for sure. It is a very complex situation, as we know, and I think that these situations will always take time to resolve.
Unrealistic to expect large investments. It will take 12 months for sure. Jaggi, you were referring to those comments by Kumar Mangalam Birla earlier in your opening remarks. That's worrying, because then what we're looking at is a situation where big ticket private capex is going to kick in only sometime towards end of 2018, and so the benefits of that will also be seen only 2019. Is that going to be a big sort of overhang for the government?
Absolutely. I think the government faces a real problem because growth is not going to revive when only two engines are firing. The one is the engine of consumption and the other is the engine of government infrastructure investment. But even government infrastructure investment is not growing in the kind of volumes that is required because you have a terrible land acquisition act which has actually doubled the cost of your land in the last 3 years. So what's really happening is, even if you double your, say, road and highways investment, you are actually getting only half the number of kilometers you need. And that is what is stuck. So till you change that land acquisition act, you cannot create growth, jobs, because the public investment is not feeding through to the economy and creating more of this thing. So that is the time bomb that the UPA left behind, and it had exploded now. So now Gadkari is trying hard, but you cannot really revive growth and public investment when land costs are so high, especially in the infrastructure sector. So I think you have to fix that land acquisition act. You have to see that it becomes a reasonable act so that land costs, if you are paying 2 crores for a hectare of land, basically you are saying every kilometer just the land is going to cost me 2 crores. Who is ever going to make money in 30 years from land that costs that much in any highway? And over and above that, states are having their own collection costs and other things. So basically, if you want to grow jobs, you need to change the Land Acquisition Act, and you need to stimulate sectors like construction and all, which is where the jobs will really happen. So I think the government's revival cycle will definitely not happen till at least 12 months, and that what Mr. Birla says is absolutely right, because it will take you 12 months to resolve all the bank bad debt problems, and then the investment cycle will start slowly turning around. So we are looking at almost election time before you see some revival, which means the voter is not going to feel it. The government should be worried about that.
I would believe that one person on the panel will be happy to hear that the voter will not feel some of what is happening here in the last 5 years, and that will be Priyanka Chaturvedi. But on a more serious note, we polled our viewers on NPA and the toxic assets sitting on banks' balance sheets. Has the government failed to fix the NPMS? That's the precise question we asked, and 54% of our CEOs said it has failed. 29% believe it hasn't failed. But Priyanka, I'm going to ask you a little uncomfortable question here. While the largest overhang on the Indian economy, and I think the biggest hurdle to our economic recovery, to growth, to development, to fresh investment is the toxic asset, is the NPAs, it really dates back to your government. The legacy is all the way back to the UPA. They germinated when you were in power.
So, okay, so as far as an uncomfortable question is concerned, I've been facing those uncomfortable questions for quite many years, so that is absolutely all right with me. The second question is about NPAs being germinated during our tenure. I think that would be a little unfair to say that, you know, not supporting businesses and banks not being able to fund a lot of businesses which were growing at that particular point in time, or not showing confidence in the businesses, would also lead to negative growth trajectory, which we must consider. But also must understand that a lot of streamlining that you see today happened under the RBI Governor Raghuram Rajan, and he had total support from the government, UPA government then. And what you see right now, actions being taken right now, and when Mr. Raghuram Rajan said that we must go public with the names of people who have who are on the NPA asset list, is something that was initiated during our tenure. So when we face the flack for investing in businesses or banks investing in these businesses, we must also be commended for ensuring that streamlining process begins. It's unfortunate, either we hold back our businesses or we show faith in them, and if documents were in order and ensuring investments are timely given to them so that they grow, generate employment, do well for the nation. It's unfortunate that we are at a situation like this, but we do not see a serious commitment coming from this government as far as addressing this concern is, matters.
I'm sure Hitesh has a counter to that, but Hitesh, I have a question there as well. While the point is, while Priyanka sort of has made a point, the fact of the matter is, and I don't, I completely agree with the point that Supriya made, that these germinated during the UPA regime. It was a fallout of a complete policy paralysis in New Delhi. But the fact is, in even corporate India, which has otherwise been very gracious in evaluating your government's economic performance, believes that not enough has been done in fixing the NPMS. The IBC mechanism that's now been put in place probably is too late, and now people are also doubting the efficacy of this mechanism. It almost feels like this is a ticking time bomb, and no one has a clue on how to fix it.
Well, two answers. First, your answer lies in the question, has the government failed to fix the NPA mess? So one thing is clearly established, that the NPA mess is a legacy of the previous regime, and what we are now discussing is how are we trying to fix the mess that has been created in the past legacy. Now, as far as fixing the mess is concerned, I think the Swami and Jaggi are also there. The only answer or solution which you see from the corporate India is something about recapitalization of the banks. That's the only solution you keep on hearing. But as far as IBC is concerned, IBC was also one of the important steps that was required to be taken, and you can see the results of IBC in last 6 to 8 months, when we say more than 600 disputes have been handled by NCLT and they've been able to successfully resolve. Now, you are not going to get a quick fix that in overnight you are going to get a solution on something that has happened in 10 years. I'll give you an example. For example, there are like at least more than 100 to 200 companies. They are dud companies where there was absolutely fraud. CBI is also identifying those cases as to how the loan was borrowed by them, and to the extent where they were provided 5,000 crore, 10,000 crore and 4,000. I can understand that you are talking about the running business. There are some companies which can have genuine difficulties, but companies which were only existing on the papers, which had existing MOUs on the paper, were able to borrow 5,000. Now, let me ask a question. I mean, and there are economists today on the channel. How do you fix that problem where there has been a fraud and the money has been siphoned? Is it that easy that once the money has been siphoned, you are able to resolve the mix? So there are the question of genuine business. For example, like if you will see, like look at the case of SR Oil, where you can see the solution now coming in, and that will, the deal once it goes through, it will address 50% of its overall debt. So that is one way to resolve the issue. So you can see that this is also like a work in progress. You cannot have an overnight solution, but I think you can see an honest attempt and mechanism.
You know, Hitesh, I'm going to ask you to just hold your breath there, and I'm going to throw this to Swami, because I think there is another leg to this entire NPA debate. And Swami, when Raghuram Rajan was in office, he almost waged a war against the NPAs. He gave a deadline for provisioning, he waged a war. The narrative in the RBI was, we are going to crack down on bad loans, these errant promoters will not be spared, no one will be asked to leave unless the money comes back home. That was the narrative. In the middle of this, Raghuram Rajan leaves for reasons that we are not discussing on the show this evening, but were political in nature. What happens next? Urjit Patel comes in and also comes in demonetization. So the entire drive of banks and RBI gets distracted from NPA war to demonetization. Who are you going to blame for this?
Well, I'll simply say that, every government has to fight wars on several fronts. The mere fact that there's a problem on NPAs does not mean you ignore all the other sectors. As far as the NPA thing is concerned, yes, Raghuram Rajan was the first one who in effect said, forget just having an exit policy for workers, we must have an exit policy for the owners. This is something that actually had not happened since independence. It was a completely new idea that, these guys who till then, whenever there were NPAs in the past, the general feeling was when the business cycle turns around, these fellows will revive. Any attempt to get them to repay when the cycle was down, the legal delays were too much. So we said, let the cycle go up and they will revive. We have now got to the stage of the size of loans and economic integration with the rest of the world, where the idea that there will be once again a global upsurge and all boats will start floating again, that has finally gone. And now the resolution has begun. I would say that the pace of resolution is at this point of time as much as you could have expected. It is not fast. Certainly the problems have not been solved. But the creation of an exit policy for the bad owner is finally becoming a reality, which was never the case earlier. I would like to have it see it done much faster, and I do hope legal delays don't cause a further problem in this kind of resolution. But a great step forward has been taken since Raghuram Rajan made the proposal, followed up. As I said, therefore, it was the UPA government plus this government. Both have moved in that direction. It's a very necessary direction. We need to speed it up further.
Okay, Swami is cautiously optimistic. Jaggi, 30 seconds. We need to take a break here. Do you share Swami's cautious optimism, or do you think that the government has sort of taken its foot off the pedal as far as the NPA issue is concerned? I mean, we are more than 3 years into the tenure of this government, and yet the crisis is nowhere close to getting resolved.
The one thing I will seriously compliment this government for is that it has not taken the easy way out and just shoved all the NPAs, just quietly recapitalize the bank and say, okay, we replace all this money, now you guys go and lend again. I think it has forced industry and banks to feel the pain so that they learn a lesson from, if it was easy, if you just given them a 50 or 100,000 crores and say they would have happily written off the loans, and then they would have started another stupid process of giving the wrong loans to the wrong people for the wrong reason. I think they have stopped that process. What they have made a mistake is it will actually come back to bite them in the butt, because I think this process will now taking longer. It is ending up right at election time. But I think when I have not seen industry lose unit after unit because they had to give it up. When did you see SR losing its biggest business because it had to save the rest of the group? When did you see a Jayaprakash losing its most priciest cement unit because it has to save the rest of the farm? I mean, this industry losing its business is something that we have seen for the first time, and that's a good thing. That you can lose your business is the message that's gone through, and that's good.
Okay, you can lose your business, the message has gone through, and that message is good at a time that Indian promoters learn that the money in the banks that you borrow is not your money. It belongs to banks and it should be paid back in time. And if not paid back in time, it should be paid back with a penalty. But on that note, we're done with 6 big questions of our poll. We still have a lot more ground to cover. I'm going to take a quick breather here on the India development debate and come back and discuss some very pertinent questions that are still left to be answered. Welcome back. You with the India development debate. It's time to put the spotlight on Indian markets. They've been achieving new highs every day. The Sensex and the Nifty have hit an all-time high each day. That's the question we put forward. Is the market euphoria justified? It looks like our CEOs are far more cautious than market men out there, because 37% of them say yes, but a 43% say no, the euphoria is not justified. Jaggi, I'm going to bring this to you. While you know, the market men would like to believe that there is every reason to be euphoric, the CEOs are not as optimistic. Are they being cautious, or are markets really detached from reality, or are markets sensing a revival which is right around the corner?
Well, CEOs know how their business is running. So if they find market prices going way ahead of their profit margins, then obviously they know that there is a disconnect. However, we should be clear that this market rally has been driven by excess liquidity, both globally and domestically. After demonetization, as the government itself has claimed, a lot of money has come into mutual funds. People are doing it through SIPs. So an EPFO is going to invest in the markets. Then all kinds of monies are pouring into the markets. So that's bound to raise this thing. But in a way, it's a good thing for corporate India. If you are able to raise money from the markets, then actually even if your interest rates are slightly higher, you will still manage to cope, because you will be able to raise funds. At least the big companies do not have to worry about the interest rates thing like that. But I think markets are running ahead, and I think it will take at least 2 years for earnings to catch up with the kind of price earnings ratios that we are currently seeing. So markets are discounting far into the future, at least 2 years ahead.
Swami, do you agree with that view? Markets are sort of discounting far into the future. I mean, you know, a day after, the CSO reported, quarterly GDP growth of 5.7%, we've had the Nifty and the Sensex move up swiftly. Nifty up 0.5%, again, close to the 10,000 mark. It's almost as if they're in another world. What's going on here? And, the fact of the matter is, like Jaggi pointed out, much of this is liquidity driven, but, it's FII money. I mean, these people know a thing or two about their money. They wouldn't be putting their money in if they didn't believe in the fundamentals of the market. So, is this a bit puzzling?
This is not a problem just in India. The world over, across all the stock markets, some people will say, the markets have taken leave of their senses. Other people will say, no, as Jaggi pointed out. I said, markets are not driven by common sense. Markets are driven by supply and demand. If more and more money is going to pour in, looking for a limited number of areas, then the prices are going to go up. I mean, I noted the astonishing news item that Argentina, a country that has constantly defaulted through its history, has just been able to raise 100-year bonds. I mean, this is the desperation of the market to find any outlet which gives any kind of yield. Okay. So the question is to say the market is discounting such a certain kind of cool calculation. I'm sorry, that's not what's happening. The markets are driven by greed, fear. Right now there is greed. And even the cynics who agree that there is a bubble say, yes, there may be a bubble, but history shows, including the bubble of 2003 to 2008, by 2005, Robert Shiller had written a book called Irrational Exuberance, which got very good reviews. And yet prices continued to double till 2008 before the thing collapsed. So there are many cynics saying, yes, the market is completely mad, but instead of getting out right now, let me wait for the market to go up even more and then get out at that particular right time. This is a high-risk game, but I think there is agreement among almost all the professionals that, the markets are in a bubble situation. One day the whole thing is going to blow, but nobody says it's going to be tomorrow or next month. It may be next year, maybe 2 years from now.
Okay, I'm going to take this discussion to where it really belongs and talk about the biggest Achilles heel of this government, and that is jobs. Ms. Shobhana Kamineni, I'm going to come to you. 10 years from now, the size of India's working population is going to be 1 billion, which is going to be 18.5% of the global working population there, the global workforce. Do we understand the magnitude of the task before us is really the big question. Jobs just don't get talked about as much as they needed to. What are the options that you believe the government has to employ as many Indians? Because my survey says that the government has failed on this dismally in the first 3 years of its tenure. A majority of the CEOs believe that the government has failed to create jobs.
In today's paper, I read about the Prime Minister announcing with great certainty about creating the low-cost housing. That's exactly what happened in China. When people had to move out of agricultural jobs, they had to move into another strata. Even now, we see a over dependence on agricultural work. I wouldn't even call it jobs. So we need to create more jobs in other areas, and construction is the easy one. That's where many jobs will come. India has a very low percentage of construction jobs. China is close to 55%. India needs to move in that direction. That will be the quick and easy win. But the real systemic win, which you were talking about, if it's a 10-year horizon, we need to look at the sectors that will create jobs. I think healthcare should create 100 million jobs. Tourism, these are and then the new areas of logistics, e-commerce. There are many areas that will come. And having dialogues with the Prime Minister, I understand that he gets the picture of what Industry 4.0 will be a constrained workforce, that the new IT, so there's going to be a whole variety of new high-paying and high-requirement jobs coming. So there'll be retraining, there'll be jobs in new sectors. But having said that, underpinning all this, we have to know that it'll be the service sector, it'll be the construction area, it'll be agriculture that is going to be required to come to the table. And I must commend the fact that, not only industry, but the NSDC and across the board, I see so much more emphasis on skilling. And this is something that, when we're building the institutions that will train and fit jobs for the future, it's a very important point. I'm hopeful that not only will India be a world where we create jobs for ourselves, but we're going to be the youngest population, and we have to look at an aging world and see where will the trained people for us fit around the world. So we should use this demographics into a dividend. It's very important at this time to invest in education and training and finding the right fits.
Okay, we're completely running out of time. I want to give a quick comment to both Priyanka Chaturvedi and Hitesh Jain. Priyanka, to you first. Jobs is one area where this government has a poor record, and unfortunately the Congress hasn't been able to capitalize it. I mean, your own track record on job creation was far better than this government. Even though it promised jobs, it promised Achedan 10 lakh odd jobs were being created annually during the UPA regime. It's down to 1 lakh in the NDA regime. Is that the big issue that the Congress needs to be highlighting now?
So firstly, we've been emphasizing on that, but however, it is important that the people of the country realize that while this became a big issue during the 2014 campaign of Prime Minister Modi, they haven't been able to live up to the promises, and I'm very certain people are realizing that post demonetization and many other promises that were made, they have seen that happen. I quite agree with the CII president, where she says a lot of new sectors could be looked at to create employment opportunities, and how we can make a demographic dividend, ensure that we make it a dividend rather than a disaster, is something that the government needs to prioritize, and prioritize urgently. And the numbers speak for itself, not being able to create enough jobs, not being able to live up to the expectations of the people, the promises that you all had made, and not even really looking at the sectors which Shobhaji was mentioning, and ensuring that policies come up to ensure that we have a skilled labor, is something that the government really needs to look at and prioritize its entire goal and agenda as far as this is concerned. Politics is not the only agenda, it is also good governance.
Hitesh Jain, I'm going to give you 30 seconds to answer that question. Will you be humble enough to accept that jobs is the big red on your report card and all your energies need to be focused on creating more jobs for India's youth before India's demographic dividend becomes the demographic disaster?
Well, job creation is certainly an important aspect, but as Shobna ji mentioned, that low-cost housing, tourism, e-commerce sector, these are the three sectors government has given sufficient boost and has made taken sufficient steps to address these issues. So on low-cost housing, all the stimulus and everything that was provided, the interest subvention scheme and other things. So these are the steps in the right direction, and I'm sure, as Jaggi was mentioning, that you will see all this benefit percolating in the system around by 2018. But I must also emphasize one thing, that this government does not look at the decision purely on the principle of quick fixes, and secondly on the election basis. It believes in the reform and therefore it takes the steps to address those reforms.
I'm not sure if Swami and Jaggi are going to agree with your view that this government doesn't look at policy with an eye on elections, but that's a debate in itself. Completely out of time then in this edition of India Development Debate. Thank you, Hitesh. Thank you, Priyanka Chaturvedi, Shobna Kamineni, Jaggi and Swami. Thank you so much for taking time out and joining us in this constructive dialogue on the state of the economy. Now, the ET Now CEO poll clearly indicates that the mood of the economy isn't one of gloom and doom. Corporate India believes the revival is round the corner. Viewers, we kept the CEO poll discreet because we wanted India Inc. to be candid in their answers.
Indeed, in fact, the pain points have now been identified. It's time to get down to business. We are watching because we want to rise with India. Thanks for being with us on the India Development Debate.
Next.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.